What's going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. Oh my gosh, if you're hearing this video, that means you're alive and I'm alive. We survived the sell-off. Take a look here at these box scores. I do believe we had an incredible capitulation event in the market today. The S&P 500 finished down 1.68%. It closed towards the upper middle end of the day's range as did these other indices. Nasdaq QQQ finished down 1.63%. Our IWM small caps finished down 2.38%. The dogs of the Dow were down 1.55%. Our ETF was down 2.02%. Volatility across the board did have a massive spike higher. We saw our TDEX, which is the tail index, that one had a huge pop. We saw the VVIX had a huge pop. The VIX went above 30. At one point it was, I believe, above a 32 handle. And yeah, we just had the explosion in volatility that typically happens when you're in a capitulation event. We had washout breadth. We only had 12% advancers in the small caps. We had 8.4% up volume, and the trend model flipped to a -3. Economic data, we did get some news out this morning. We got some flash PMIs. And I noticed with a lot of the financial commentators, they keep saying like, oh, the market is selling off because recession is approaching. And what I'm actually seeing in reality is the market is selling off because we're not getting recessionary data. Throughout the past week or two, as the market really is just cascaded, every time some economic data comes out, it's like, come on, please show we're in a recession, because that'll mean that inflation's coming down. Almost all the data is coming out better than expectations, and every time a data point is released, up better than expected, then the market just keeps selling off. So we got more of that today. We had these PMIs that came in above expectations. We also had Jerome Powell talking to a bunch of small business owners. They had this Fed Fed Listens event. And the whole thing, it looks like a dog and pony show. It's like very cringeworthy to watch, where it's basically like you have all these small business owners, not really even small business anyway, like they actually have pretty large businesses, but yeah, they all talk about like the economy, how it's affecting them, and like all this stuff. And little do they know, like the Federal Reserve is literally trying to push the economy into a recession. That way, hopefully, these small business owners, they get to fire more of their employees, and that'll reduce demand and reduce inflation. It's pretty wild stuff. Yeah, that was the Fed Listens event. VIX Futures term structure is still inverted. So that does mean that, even though we had some buying that occurred at the end of the day, we are still in the eye of the storm. I will say that, until this VIX Futures curve uninverts, when it uninverts, that's when the October contract is trading below the November contract and the December contract and so on and so forth. Until that happens, we are still in the eye of the storm. We're technically still in the vol event. But I would say that once the futures curve uninverts, that'll be a really good indicator that like, all right, this liquidation event is behind us. Finviz Heat Map, looks pretty horrible. Only good thing about this is that energy is getting clobbered. Crude oil was down huge today, and it's below 80 bucks a barrel. So we are really getting there. I mean, now everyone is freaking out over like hyperinflation, and it's like, dude, crude oil's only at like 79.43 a barrel. Like that's not what happens when hyperinflation's going on. But anyway, we've had some major moves in the currency market. Let's take a look at the dollar index. That was really the canary in the coal mine today. Dollar index just ripped out to a high. And the UUP, which we track, that actually hit the 3 standard deviation mark away from the 20-day simple moving average. So we've got the dollar in an incredibly overbought position, and we have equities and bonds that are in an oversold position. Take a look here. We did start to see a rally in the 30-year treasuries. These were up 0.54% after really just washing out earlier in the session. And take a look at this. We'll go to the VIX. The VIX, now this is really a vol event. And, in hindsight, we should have known this. Like, honestly, I should have known this, that the VIX was kind of just like consolidating and almost putting in like a VCP pattern, like a volatility contraction pattern, Well, today we got the actual breakout. We went all the way up to about 32.34, and that's definitely nothing to scoff at. It's pretty comparable to some of these other vol events. We saw heavy options players buying puts. Apparently today was like the #2 day on record for SPX options. And if we look at our intraday put to call ratios, those all came in, just showing that there was a lot of put buying. Look at this. So we'll go to CBOE, intraday market statistics. Yeah, so above a 1.3 reading all day. So investors were really just loading the boat on protection. And lo and behold, that ended up giving rise to a nice bounce into the end of the day. So our S&P 500, we were down at one point. We almost got to the lows from June. We got all the way down to about 3660 on the S&P 500. So close, right? I mean, the lows were back here at about 3640. So, we got very close. I can't imagine how many investors were like, oh yeah, I'm going to cover as soon as we get, as soon as we retest those prior lows, or like, yeah, I'll buy if we get to the lows or below them or whatever. And we had some nice covering at the end of the day, which was good. This has definitely just felt like and really looks like a liquidation event. And the reason why we know that is because now there's almost no stocks that are in uptrends. It typically happens when investors just start selling everything. I'll give you an example. This is one of my largest holdings, Wolf. This company, Wolfspeed, actually ended up finishing out positive today, which is great. But I mean, when you have like these really good stocks that like, yeah, it's in a nice tight pattern, it's being accumulated. Oh yeah, look at that, we're starting to break out. When the liquidation comes and investors are just forced to sell, they even sell their best names like Wolf. So the fact that we got to a point where there were no relative strength names, that's further evidence that we had a capitulation event. And I know online, like, whenever you're in the middle of a capitulation event, that's when you have the vast majority of people saying, we're not in a capitulation event. The market can't bottom because we haven't capitulated. And like, oh yeah, there's no fear in the market. Typically when there's the most fear, you get all these financial commentators that most likely they're in cash because they were super fearful. And they want the market to keep going lower because they're in cash or either short. And so they go, oh, there's no fear. And it's like, if there's no fear, like, why are you short and or in cash? Like, you know what I'm saying? So it kind of becomes like counterintuitive. But yeah, we're seeing just based off this price action, like, there's fear. Like, today was day 27 of the sell-off. So yeah, I mean, whoever wants to say like there's no fear on day 27 when the VIX is like blowing out, there's a record number of put options being bought, and AII investor sentiment surveys at like those bearish levels in like 40 years or whatever. Like, yeah, sure, there's no fear in the market. It's all just everyone's fearless, everyone's bullish, everyone's just buying everything. Yeah, okay. So what else do we have? Enphase, I'm also long this one as well. Again, just more to the fact that even the best names, they got sold off. The baby got thrown out with the bathwater, team. So let's take a look here. The Russell 2000. Let's also take a look at the ARK Innovation ETF. I actually added to my exposure in ARK today. And I just think this is going to be one of the best assets to be in, like ETF-wise, if we do get a downside surprise in inflation or any sort of bottoming event in the market. The ARK Innovation ETF put in basically a doji, right? A little bit of selling here, but for the most part a doji. Finished down 2.02%. I'm looking for a nice bounce on this one into the end of the year. Because remember, when were the best times to buy ARK since this May period? Well, there was this one really good time. We got down to about like 35. Yeah, 35 bucks, 35, 38, somewhere around there. And there was another time we got into the 30s, about mid 30s. There was this time we got into like, high 30s. And then right now, I mean, if you're too afraid to buy now, it's like, when are you going to buy? What are you going to buy when it's at like 50? And then it just rolls over. So for me, I just kind of know where we are in the terms of like the psychology of the market, the price cycle, how these trends are going, how oversold we are. and the fact that a lot of the inflationary pressures, you know, people are freaking out by looking in the rear view mirror, but if you look ahead into the future, these inflationary pressures are going to come off. So yeah, I feel pretty comfortable getting even longer there. So these were my trades for today. I took a stop on my Hut 8 mining position. Where was this? Yeah, I closed out the remaining half of my Hut 8 mining shares for $1.70. I paid $1.83 for these. I took the other half off for about like $2.20 something cents. It's not too bad. And then this ARC trade, I added the December 16 38 strike calls. I added that one in bigger size. And yeah, I did end up taking some zeros today, which is never fun. I had a roll of a trade. I lost the profits from the other day when I had like a double or whatever it was. And there was one other that, unfortunately I played for a bounce and, just didn't work out. I always hate it when that happens, but yeah, I think this capitulation event just kind of kept going and going and going. And yeah, now think about it. We're day 27, and the window of horrible seasonality ends on September 25th. Now, maybe this thing just keeps going until the end of the month. That's kind of what I'm prepared for. But think about it. If you're like super bearish, just had a huge capitulation event, everyone bought puts, there's only like 5 more trading sessions in September. And then suddenly we get faced with the beautiful end of year seasonality that just gets so much better. So typically, I don't know why it is that in September, like all these asset managers, like that's when they do just a lot of their selling. But once they're done selling, then they're done selling. Like that's about it. And we know that their exposure levels are very low. So I know what's going to happen is like if we start balancing, the market starts rallying higher, and at the end of the year, people are going to go, but, inflation, like what's going on? All the same stuff applies. But it's really just, the market's all about a buy button and a sell button. And it's like once you run out of stuff to sell, then you're no longer hitting that sell button. Maybe you're hitting the buy button. So yeah, definitely a crazy session, massive capitulation. But I think the worst is over finally. And I think better things are to come in the future. All right, everyone. Enjoy the rest of your evening. Enjoy your weekend. We're going to be putting out our Pristine Capital Weekend Market Analysis video and our Pristine Capital Weekend Watch List video. So definitely stay tuned for those. If you're interested in receiving them, go to the pristinecapital.net website. You can get yourself signed up. Have a good weekend, everyone.